Hello, this is Boyce Velasquez with Wealth to You Media. I wanted to talk about the stock market. Within the past few days, there's been a lot of media coverage and talks about the performance of the stock market, especially considering with China devaluing its currency and other things going on within the United States and globally. So there's a lot of panic. People are on the roller coaster ride ready to jump off, but as you know, if you jump off a roller coaster ride, most likely it's going to end tragically. So just keep that in mind when you're thinking about the stock market. So like I said, within the past few days, the Dow lost a lot of points as well as the S&P 500. So there's a lot of panic, and there's one thing that people should know about the stock market is that it's like a roller coaster ride. You have your ups and you have your downs. There are periods or years where you're making a lot of money, and there are times where you lose money. And nobody has a crystal ball to perfect the timing. So here you are with a lot of panic or hurrahs, depending on how the market is doing. So just some pointers that I wanted to put out there for you guys, just to for everybody to think about is it's a roller coaster ride. When you have money invested in the stock market, it's a roller coaster ride. So my advice to you all is just to stay on board for the ride until the very end. And then when you get off, more than likely for most people, you'll say, wow, that was one heck of a ride. You know, there were some scary points, some scary parts, but at the end we made it and I enjoyed the ride, right? And there are there are a few cases where people who, like I said, nobody has a crystal ball. So there are some cases where people really do need to access their money, so they sell off their investments or what have you, or completely liquidate their investments. And they do that in a down market where they have lost, some money, in some cases, a lot of money. But for most cases, that doesn't happen to most people. So just keep in mind that it's a roller coaster ride. Stay on the ride until the very end. And just to state some stats, just to state some stats for you, just to help keep you optimistic and confident and staying on board. Um, since 1926, the stock market has averaged 10%. So that's from 1926 to 2015. The stock market has averaged around 10%. Now, from 2009 and 2014, the stock market has averaged around an 18% return. So as you can see, there's variations. There's, a lot of periods where money has been made, and there have been some periods where money has been lost. But if you just look at it from a longevity standpoint, from the long term, that most people will make money. And if you look at historical data, you can expect, a good return, 10%, 12%, depending on, or even more, right? Depending on how the stock market is performing within a given year or time period. So don't give up. Don't lose your mind. Don't listen to the media because they're talking about this every minute of the day about the panic, and people are just in chaotic mode and really don't have any faith and think it's the end of the world, whatever else people come up with, because, it's all emotional based, so people will come up with whatever stories and whatever other ways just to, really hype things up where, yeah, I mean, there's concern, right? I mean, this is reality, so, but don't get overhyped about it, just stand for the long run, and, keep in mind that when there's a bull market, meaning that, just like a bull, a bull charges. That means that, things are going good. right? And then you have the bear market, where if you were to see a bear, what you're going to do? You're going to get scared and you're going to try to run away, right? So right now we're going through that time where, it's a bear market where people are really getting hysterical. But you know what? Stay on board. This is the time in a bear market. This is the time where you want to make purchases, when you want to purchase more stocks or mutual funds or what have you. I'm all about diversification, so I would suggest that you purchase a mutual fund, something like an index fund, right? So, in bear markets, this is the time to buy into the stock market because prices are low. And in a bull market, that's where you want to ease up on your buying because that's where prices have risen and are a lot higher. So you don't want to buy too many stocks high, you know. So that's how a lot of people accumulate wealth using the stock market. So just some pointers I wanted to put out there for you. So hopefully you found this video informational and purposeful, and like I said, stay on for the long run, and for most people, you'll be okay. This is Boys Velasquez with Wealth to You Media. Thanks.